have bought farmland outside Bhopal with another friend of mine. There was like this land parcel which none of us could afford on our own. Then we split that land into multiple parts and then we bought it. And this has been 1.5 years. That's already doubled. Hey everybody, today we have a new episode. We have Mani with us. I will shortly introduce Mani, but before we jump into today's topic, it's about real estate. The FOMO around real estate is real. It's crazy. Everywhere you go, people are talking about real estate. I was in the elevator the other day and some guy was talking to a broker about... So basically the prices in real estate have just shot through the roof. Societies are coming up and they are selling out at pre-bookings at like obnoxious rates, and it's just like the mania, real estate mania is crazy, right? But what that also means is that not everybody can afford real estate because, like I said, the prices are so prohibitive now that people looking for a house or looking for an investment are finding it hard to actually get into real estate. And that's where I came about this concept of fractional real estate and fractional investing in real estate. I was doing some digging and then I found Manisheel. Manisheel and I go a long way back. We were at Ola together in the marketing team. Manisheel had joined from IIT Bombay. And then he left Ola to go do his MBA at IIM Ahmedabad, and then he came back to Ola as a senior category manager, senior program manager, did a bunch of stuff there. 3 years ago, Manisheel started Investorey. The link is in the description, you can check it out. But essentially, Investorey is a fractional real estate platform. I will let Mani do the talking and tell more about what Investorey is and what they do, and we'll try and uncover this fractional real estate in today's episode. If you have to explain fractional real estate in a nutshell to your grandmother, right? You were just telling me before this, to your mother-in-law, for example, how would you explain it for the viewers?
In very simple terms, if I wanted to, and I've got my mother-in-law to invest in this category. Yeah. So I have explained it to someone. I had to explain to a large family for them to agree to invest in this, and I explained it very simply that it's a big cake, which it is an income generating cake. Now you don't have the money to buy the whole cake, but you can buy a piece of it. It's as simple as that. Now this is not a new concept. It has been there in the US since 2012. We are 10 years behind them in terms of real estate investing.
But it's like a pastry instead of buying the whole cake, because you don't need the whole cake, you can't afford the whole cake, you just want to dip your toes in it and see kaisa chalta hai, what is it like. So thanks for that. Where do you think we are in the real estate cycle, given the last few years have just been on this crazy tear, right? Prices have doubled, tripled, and almost a decade before that, prices didn't do anything. Where do you think, how do you see the prices of real estate across the country in the next 5 years? Folks, this is completely speculation. He doesn't know, I don't know, nobody knows, but given he's in the industry, I'd just love to get his inputs.
Our last boom, last bottom out was 2008.
Yeah.
Last peak was 2014.
Yeah.
But the last bottom was 2008, 2014, 2021 was the bottom again.
Yeah.
So real estate normally deals in 7 to 9 years cycle. We are in year 2.5. We have 2.5 years into the last cycle.
Yeah.
We have seen significant boom because of COVID.
Pent up.
People were hoarding money. So you're seeing period of stagnation, which is in line with global scenario where things are not working out well. As soon as that ends, you will see another burst. Because as I told you, so another 2.5 years is what we expect it to go again, another quick increase, then stagnation up to 2029, and then it's going to flatten out. We don't know at 6 years from now what will happen, but we'll see after this period of stagnation of last 4 or 5 months and another 3-4 months, post election results come in, post the government is formed, and we get into a stable economy again, with worldwide scenarios also improving. You will see another burst for another 2.5 years. A good time to invest because we are in period of stagnation. After 2027-28, I would say be careful.
Got it. What are the returns like? Typically, you've been in the industry for so long, and I know you probably don't have a strong ballpark, but if there's a range that you can share with us, what are the returns like? What is the typical time period that one should hold these real estates for? If you can share some light on that.
Real estate is a product which can get you immense capital appreciation. It can also get you a lot of rental, but it can also lock your money for a long time. That's a risk which people have seen in the country. So just to get quickly into the returns bit, if you are looking at residential real estate in a tier 1, tier 2 city, you can look at 1 to 4% of rent and when I 1 to 4% of rent, and when I say 4% rent, the value of the property and the rent you are getting, you divide it and you get your rental yields. If you look at commercial, the rentals stay between 6 to 10%. So your residential to commercial rents are 2x to 3x in most of the cities.
Got it.
If you look at land, there is no income generation, but you get wealth creation basis your land appreciates every year, and that is how you will get your capital appreciation. In residential real estate, you can expect, let's say, 8 to 10% appreciation every year. In commercial real estate, you can look at about 4 to 6% every year. In land, you can expect anywhere between 10 to 20% every year. So if you want to compare, the returns are similar. The range is between 12 to 18% IRR or returns you can get every year, but the proportion of what is coming to you every year will differ. Commercial, the passive income is higher. The residential passive income is very low. In land, there is no passive income.
That's very well explained, actually.
I would count fractional real estate as your PFC REC stocks, which will give you a 7% dividend yield every year and also increase decently well in value. So fractional real estate is like the sweet spot at this point of time because it's a new industry. Everyone is trying to get the best deals. So when you are getting the best deals, the returns are the best. That is where we come from. A good dividend yield, good capital appreciation, safe asset to be in, because at the end of the day, even if hell breaks loose, you have a physical asset in your name.
No, 100%. And again, I think if I'm an investor and I'm looking to decide which type of asset class to invest in within fractional real estate, which are the two extremes, land and commercial, which are the two extremes, it probably depends on the life stage I'm at, right? If I want a passive income to come in, if I'm slightly older and I want that passive income to come in, then I'll probably go for a commercial real estate. And if I'm younger and I don't need passive income right now, then I'll probably invest in land for that longer time frame. Would that be a fair assessment?
Yeah, so for people like us who don't want to work long term, we all of us want to retire by the age of as early as possible.
Tomorrow.
I wish, we all wish. So passive income becomes a very good place. So just to give you some context, if you are investing about 5 crores in a commercial asset, you will end up making about 40 lakhs in rent every year.
That's
approximately. So that's if you are looking for that number, that's a good place to be. You can always diversify, but just to give you a direct analogy, for 5 crores of commercial real estate investment will give you almost a 40 lakh rent every year, which is a good enough money to sustain if you're looking at quitting your job, not working, and you can keep building on it.
And now that you bring this up, what is let's build on this, right? 5 crores, 40 lakhs is your rental yield coming in. What is the taxation on this like? Is it taxed like an equity, debt, somewhere in between? What's the taxation?
So earlier it was getting taxed as your other income, where it will be taxed at your tax slab, which is your 30% tax slab. Most of us are in, if you are investing 25 lakhs in real estate. But with the new regulation coming in, the short-term capital gains will apply, which will be 15% totally.
Okay.
And but your dividend yield will be taxed at your tax slabs because it is your interest income. When you are exiting, then your LTCG and STCG comes in. If it is below 3 years or 36 months, then you will be taxed at 15%. If it is over 3 years, then you will be taxed at 10%.
That's pretty good actually. That's like as good as it gets from a taxation standpoint.
Yeah, so they try to build in a tax benefit for people to use this model. So that is where the real estate also gets organized for the government, right? Everything becomes regulated, everything becomes white. So they have given incentives for people to do so.
You touched upon government. What's the, where do you think government's head is at? Are they thinking of regulating this? Is there regulation around this? Because for example, there's, on the one hand, there was crypto, right? A few years ago where crypto was this wild west in India. No regulation around it. People were doing what they wanted to do. Some people made a lot of money. Some people went bust. And then regulation came in, that TDS came in, and like now the industry is trying to adjust around that. At what journey is fractional real estate at, and what is the regulation around this space by the government now?
So the regulations are fairly new. That is why people don't know a lot about it.
Okay.
This category or this asset class got regulated last month.
Oh wow!
So it's practically not been not even a month since the new regulations have come in. So from now it comes under SEBI. So because at the end of the day you are being issued equities in a real estate company or something which will own your asset.
Yeah.
I should take a step back. The way it works in fractional real estate is a special company or a special purpose vehicle is created that owns the real estate asset. You become a shareholder in that company. So you indirectly own the asset. That company cannot do anything else apart from owning that asset. So you are at the end of the day being given equities, which will now the regulations are in. Now it will sit in a demat.
Oh.
So it will sit in your demat. You will have access to what is happening to the valuation, how much rent you are getting. Everything will be there in your hand since the category is regulated last month.
So will it also be traded on the exchange now that it's on
demat?
Will be.
The format it's going to be the format. The way it is going to work it is going to be a mini IPO, and then once the complete money is sourced, then it will get listed on the stock exchange. Even though the ticket sizes are like at 10 lakhs, but still it will be traded. You can, and you will have the option to liquidate anytime you want.
So it's almost like how gold bonds happen, right? There's that one issue that happens on the stock exchange. After that, you are free to exchange hands. It's just that liquidity won't be very high because people will not be looking to buy and sell at an everyday basis. It will be lesser than a stock at least.
Yeah, because you will see real estate as a place where you will want to keep money to get that those passive income, to keep getting that appreciation. Because if you're not holding it for, let's say, a 2-year period or a 3-year period, you will not be able to get the value appreciation which real estate people invest in real estate for.
Correct. कोई इंट्राडे के लिए थोड़ी ना आएगा उसको ट्रेड करने के लिए कि आज 10 लाख का ले लिया, कल 10 लाख 5,000 का बेच देता हूँ. Yeah.
The best IRRs are with lands.
So
इससे अच्छा रिटर्न कोई प्रोडक्ट नहीं देता. Even though it locks your money for some time, but highest IRR you will see are with lands.
I have bought land. I have bought farmland outside Bhopal with another friend of mine. There was like this land parcel which none of us could afford on our own. So the friend got a community together, his friends, I was one such friend, and then we split that land into multiple parts and then we bought it. And this has been 1.5 years, that's already doubled. It's a small ticket size, but I see your point on how land appreciates.
Land is the best, and now the structures are there. Even people can use the existing SPV structures to buy land together.
So let's jump into the properties and your platform, right? Let's talk a little bit about that. You've been in this space for the last 3 years. How do you source these properties, land parcels, residential? How do you source them? What is the process like? Can I, as an investor, if I want to go see them, can I see them? Yeah.
So before we basically take 4 main parameters when we are sourcing any real estate, irrespective of the sub asset class which real estate has, which is a lot. Like you can invest in a hospital, you can invest in an office, you can invest in a under construction residential.
Yeah.
There are numerous possibilities, but to find where to get it, we basically go with 4 core parameters, which is location, property, developer, and tenant. Now, the most important is location. If you are not investing in the right location, you will not make money. And the prime example at this point of time is Bangalore. Even though Bangalore real estate is rising and has been increasing significantly in the last 2 years, with the water shortage and with the flooding coming in, you will see some areas in the city not increasing in value, even though there is demand.
Yeah.
So location becomes one important factor. Second is the builder or the property. What kind of real estate we want to source? So every real estate company has some specific skill sets. We specialize in commercial and plotted development. So we basically go after offices, warehouses, hospitals, high street shops, and bring them onto a common platform where we do the next level of check, which is the developer. Because if it is not a good developer, you are basically at risk of the asset not being good, it not lasting the whole duration, you spending a lot of money in keeping to refurbish that real estate because it is not made in a right way. So identifying who is the developer becomes the third parameter. Fourth is the tenant. Your passive income or your rental yields are dependent on the tenant. For example, if you own a house and you have rented it out to someone, and if the people keep changing in 6 months, you are not going to make any money.
Yeah.
So you need to have good tenants, good lock-in, good lease. Ideal case, you have and this is where my mother-in-law is invested in fractionally. There is a 9-year lease with DMart with a 5-year lock-in built in. DMart is not looking to go anywhere. So for 5 to 7 years, I don't have to worry about anything happening. It will keep staying in the background, keep giving me returns. So summarizing, 4 parameters is your location, your kind of type of property, the developer, and the tenant. All of these are basically graded on separate parameters, and then we evaluate which ones should go on the platform or not.
Amazing. One question that came to mind while you were saying the DMart example. So, for example, she put the money in for 5 years. अब अगर उस 5 साल में there is some wear and tear, obviously वो warehouse है तो टूटेगा, तो उसके भी expenses the landlord incurs, or is that also baked into DMart's contract and they incur?
So there are 2 types of, and with any real estate, there are 2 kind of expenses. The minor expenses are borne by the tenant. The major expenses are borne by the owners. Now, for a new property, you will not see major expenses. If there is a breakage or major damage, you have insurance to cover for it. So there is always a risk, but for new buildings or refurbished buildings which are done well, that problem is not there because minor costs are being taken over by the property manager or at the tenant level. If there are any significant damage which will not be covered under insurance, then they will come under the owners and the owners will have to pay for it.
Got it. No, this is super helpful. And is there also so this is fractional ownership, right? You are basically entering into this contract with other different co-owners. Is there a risk of those co-owners being crooks or going rogue? और और एज एन इंडिविजुअल इन्वेस्टर आई एम सेफ गार्डेड फ्रॉम दैट कि मेरे जो को-ओनर्स हैं वो भले ही जाएं जेल में, मुझे फ़र्क नहीं पड़ता क्योंकि मेरा ओनरशिप क्लियर है, एंड देयरफॉर दैट को-ओनर विल प्रॉब्ली सेल इट टू समबडी एल्स एंड देन देयर बी अ न्यू को-ओनर. सो जस्ट वांटेड टू टच अपॉन हाउ मच ऑफ अ रिस्क डू को-ओनर्स प्रेजेंट in your fractional ownership?
So I will use this to basically bring 2 parts, two ends of the spectrum. One is what you're doing with your friends, where you have demarcated a bigger property into smaller properties and you have bought it together. Now, if you're looking to sell that, and I'm talking about non-regulated fractional, it's just a group of friends trying to own it together with registry. If one of them 5 years down the line says, I don't want to sell, you are basically stuck. Because with direct registration, you practically have no right to the broader property. With fractional real estate, which is now regulated, the way structures are built in, that investors don't have day-to-day management capabilities. You are not allowed to do anything at a day-to-day level. Second thing which is built in, major decisions can only be taken with 70% majority. So individual group or someone rogue who has come in will not be able to influence anything.
Got it. So you're saying the regulation takes that into account and takes care of it, and so these 2
points. That is where we come across. If people are doing registry-based fractional real estate, understand your protections there. Because people do it. Builders do it. Builders do a UDS structure, which is undivided share, where they will say, there is a under construction building coming in. You give me 50 lakhs, I will give you 8% rent every year, and I will give you undivided share of 500 square feet. There, this risk will come in because it will not be a regulated product under fractional real estate. It will be fractional, but under RERA. So your protections are far lower. So be careful about which model you are investing in. Specifically, builders invest with these models.
Interesting. So you're saying what the SEBI fractional real estate is going to be regulated by SEBI and not RERA. And then what builders do at their level is actually under RERA. And therefore it doesn't keep investors' interest at heart. That's SEBI's job, and therefore you should invest in fractional real estate with platforms or on properties which are coming under SEBI's mandate. That's safer.
See, we don't want to categorically say that don't invest in other side. We're just saying be careful. Be careful of what protections are built into the agreements. They become important. As individual retail investors, we don't have the firepower to understand where we can go wrong. So if you are investing a large sum on the other side, be careful, understand, evaluate all the contracts well.
Got it. Cool. It's so far I'm very clear. Now I'm also thinking that if I go through a platform like Investorey, what are the different processes that you manage for the investor and make our lives easier, right? So if you just want to talk a little bit more about all the benefits that an investor gets by going through a platform like yourself.
See, just to bring you the most important concept here or most important benefit is real estate is an opaque field.
Yeah.
People make money because people don't have access to information.
Yeah.
Everything else can be given by anyone. Your value chain in real estate investing is discovery, evaluation, and transaction. Pretty straightforward. And with fractional real estate, the documentation also is everything is digital, so you don't have any effort there. It is discovering, understanding where it is coming from. Is there any bad interest in place for people to do so? We basically cut the crap out of it. Like anything which is bad will not come. If you are looking at investing, we basically transparently give you all the answers. We tell you what numbers. I would say that we go the Ola way, like data first, insights first. You make a call. You are the investor. No one can influence your decision, but you should always have access to best information. That is what we provide. Hand holding with the whole process, so that in case there is any problem, you don't have to run after different people. You basically reach out to one. It gets solved. Gets solved through a tech platform, also with a relationship manager in place to help you out with all of it.
Got it. And the contracting and all also you help along the way.
Yeah, so we basically will tell you. So our legal does evaluation on all contracts, so we basically tell you if there is a pain point in the contract, on what grounds you are protected for, and most of it now with the regulation coming in are taken care of. It becomes important in places where it will not be under the regulated.
Got it. And the contract takes place between the investor. So for example, let's take your mother-in-law's example, right? The contract took place in her name, between her name and the name of DMart.
Yes.
The rental. So two contracts, I'm assuming. First contract would be to purchase from the developer, whoever that developer is. That's first contract. That's like the sale deed. And then after that, there's the rental agreement with DMart, which is the second contract.
So the rental agreement is with the company or SPV, which I was mentioning. You are a shareholder, so you have a share purchase agreement or SSA or SHA with the company.
Got
so
it.
The company has sale deed. So company has sale deed with the developer. Company has rental agreement with the tenant. You have SHA with the company.
Got it. And you as a platform helped enable both those contracts, the one with the SPV and the one with the tenant.
Those are already in place. We basically help with evaluating all of those so that you are not put into lurch anywhere. Like no one can run away with your money.
And now that we are talking about this, what's the payment structure that how much do you charge for your services and for the information for everything that you all provide?
We don't charge.
Okay, so what's your commission model, and do you take it from the developer?
We take it from the developer or the asset manager, which is bringing on the platform.
Got it.
That's the model we want to bring to a larger audience. That why should investor pay for investing in something where they're investing from a returns point of view?
Got it.
The asset manager already will charge you as asset management fee like a REIT does or like a mutual fund does. So they basically pay us. We don't want the investor to pay.
So your relationship with the developer is the one that helps you monetize your services.
Yeah.
And your pitch to the developer is that, hey, we are enabling investors at scale for you. We are going to bring you investors who are going to enter into this SPV and buy and that's good for them because faster liquidity, faster turnaround for their properties, and therefore they can keep moving to the next property and so on. So I'm assuming that's the broad model.
Investor does not need to be giving any money to anyone. Even if they don't choose to go through us, we just want to call out that you don't basically need to pay any money to anyone. You just subscribe through directly, or you can go through any company like us.
Got it. I think we've covered the pros and we've covered all the benefits and we've covered all the things that are so amazing about this. What are some of the cons that the investor should be mindful of? Obviously, cons are probabilistic, right? Hoga, nahi hoga, pata nahi. But what are some of the cons that they should be mindful of as they enter into this? What are the things that can go wrong with fractional real estate investing? If you can share some insights around that.
See, dividing it into two parts. One is the company aspect of things, which is fractional is built on companies owning something and then them you owning a part of that company. So in normal cases, nothing will go wrong there because those are specific entities. If someone who is managing your asset is going down or getting bankrupt, those entities can be shifted to any other asset manager. So you will not have a problem coming in from there. But if something of that sort happens, there will be some lag in which the transition happens, where you might not get your money, but then you will get it lump sum because that transition has happened. Because tenant is still paying you. It's just that asset management company is not there to manage the payouts for the investors. That's the first risk, which is on the company side. Small risk, usually mitigated with the regulations. There are significant penalties for people to not do this. So there are like stick built in for companies to not default or not do something on this sort. On the other side, which is a real estate side, there are two risks again. One is if you are investing in under construction, if the builder goes away, you are stuck. No matter what. And we have seen this. Builder will come and say, I have no money. I can't pay you. I can't finish the building. No matter whatever you do. And we have seen this multiple times. So be careful of investing in under construction product.
Yeah.
With constructed products or projects, the only risk is tenant running away or tenant not being there. Will you not get your rental returns? You will keep getting your you will keep getting your capital appreciation, but you will not get your rental returns.
Yeah.
That is where the understanding of what is the tenant lock-in, what is the tenant lease, what grade is the tenant becomes important. For example, we are launching a property with one of our partners, which is a hospital. The property is a hospital with 30 years of lease and 25 years of tenant lock-in. You know, you will keep getting your money for like perpetuity. So good product to make. So that is where you need to identify how do you safeguard your passive income. Under construction, how do you safeguard your capital?
Got it. And when these long-term yields are, or like, I'm assuming a stupid question, but I'm going to ask it anyway. इसमें I'm assuming there's an incremental also which is baked into it कि हर साल 10% से बढ़ाएंगे या 5% से बढ़ाएंगे या इतने से बढ़ाएंगे.
You will have rental escalations or increase in rental built in. Some of them have, let's say, 15% over 2 years, or some of them have 5% every year. So that will be called out to you. The Excel will basically quantitatively tell you that after all taxation and everything, after all deductions, I will get this across these 4, 5 years, 10 years, 15 years.
Got it.
So you will be given all of these numbers because rental agreements are on paper. They are hard coded. These are registered lease agreements. So you basically have a surety in what you will get.
Got it.
As compared to a residential where you will have a lot more variability.
No, sounds good. Super clear. I think we're coming to the end of the video. One question, or like rather the last few questions that are coming to mind. One is REITs. How is this different from a REIT? Why should I invest in this over a REIT or vice versa? If you can shed some light on that.
Yeah. So again, simple analogies is what we want to deal with. REIT is like a mutual fund. You are giving, a lot of people are coming together, giving money to an asset manager or a REIT manager. For example, you are giving money to MVC to invest in multiple assets which will come under their portfolio, which will generate returns for you and give it to you basis the agreement.
Yeah.
While SM REIT or the fractional real estate which has come up is basically enabling you that I want to own this particular real estate and like a stock, like I want to own this stock. So I will only invest here.
Got it.
Direct analogies, think of bigger REIT as a mutual fund, think of smaller REITs as equities, that you can pinpoint this particular property in this particular location I want to invest.
So the smaller REIT is like literally a stock that you're buying.
Literally a stock, yes. It's as my mother-in-law has invested in DMart. DMart will be a stock here.
Amazing.
DMart is already a stock, but DMart warehouse is a stock here.
Amazing. What are the trusted platforms in India, beyond yourselves of course, that you would recommend, that you think are legit and one can trust and like explore?
See, from a normal real estate standpoint, most of the platforms are discovery platform where people will come and list their properties. The people will come and discover those properties. They will talk and they will do the transaction. Magic Bricks, Common Floor, Housing, Home Bazaar, which is where Home Bazaar is one where I've liked the experience the most. The way the product is built, the way functionalities are built. If you're going towards the investing side, there are not a lot of platforms. You have companies doing it offline. Or you have companies like Strata which partner with us to get you fractional real estate. For fractional real estate, there are companies like Strata, HBits, PropShare, Asset Monk, and Wisex. So these are the bigger players in the market which are letting you invest fractionally. Other than that, you have people letting you invest in builder financing through NCDs, which is companies like Restack. There are companies which are letting you invest in farmlands, like Anubhava. You have Go Smart Agro, which are letting you invest in plantations. So there is a lot of spectrum being created in the market because of regulations changing, but no specific platform bringing all of them together. That is what we were trying to do.
Got it. Thank you so much for that. I think as a potential investor to think about this, and I'm assuming people will find it helpful. Folks, if you have any questions for Mani, please feel free to drop them in the comments. I'll request him to answer those. I hope you found this video helpful. Mani, any parting thoughts before we let you go?
See, parting thought is, as we tell all our, and I tell anyone who comes and meets me, it's not about any company, it is about where you're investing. Be careful. Real estate is a place where there are people with not the right mindset. The people are there to take money out of you. There are brokers who will want to get the maximum share. So always be alert. Is like सतर्क रहे, सुरक्षित रहे.
Delhi police.
Delhi police. That is the motto you should deal with real estate investing, because you will get a good return, but you will also put yourself at risk.
So nothing comes free, right? अगर आपको बहुत crazy return मिल रहा है तो obviously उसमें crazy risk भी है. तो be mindful and see your risk appetite and understand accordingly कि मतलब आपको इतना पैसा डालना है इसमें, are you okay losing that money for this extra return or not? So that's, I think, the trade-off. If you made it this far, please like, share, subscribe. That brings us to the end of the video. Please drop your questions, comments. Mani is super helpful. He'll respond to those. And share this with your friends if you found this video helpful. Thank you so much and see you in the next one.